It's May, June 2017. It's the first paper. We're looking at question 3, which is cash flow. We've got information here that pertains to multi-enterprises CC. You've been given an extract from the statement of financial position as at 30th of April. You'll see the layout and format is very, very, very similar to those study guide examples that you've got in your UNISA study guide. So this question is actually a nice question to do. Obviously, exam technique is important. So where must I start when I get a question like this? Well, it's normally here at the dish information. There wasn't that many points, and we spoke about this, okay, being important, the required. Do they want the entire cash flow?
No, just the indirect method and the operating activities.
Yes, they just want the operating activities of the cash flow. So what do? We go to our answer sheet and we write down the template, okay, the format. See, this is what you would study in terms of preparation. Okay, so this is obviously cash from operating activities. Heading. Okay, once you've got the heading, then we need to go and we need to record the profit before tax as the opening line item. Okay, remember, in an indirect method you start at the bottom of the income statement and you move backwards. Okay, remember we said theory was important because you're providing for cash movements during the financial year that relate to the business. Okay, so I want inflows and outflows, that's all I'm going to be looking at. But am I going to be analyzing inflows and outflows if I've got the indirect? No, because now I'm starting with profit before tax, which is an accrual. I need to then provide for the cash when I start with the profit. Okay, because do you agree, profit is going to include certain expenses that aren't actually outflows?
Yeah.
Can you think of some examples? What expenses are expenses but not cash flow?
Accrued income expense?
Well, an adjustment for an accrued income could possibly be, okay, an increase in an income because it's an accrued income, but you haven't received all of the cash. Does that make sense?
Yeah.
Okay, that's thinking a bit too outside the box. Think more like easy, more common. Like, what is a common expense that you see in the income statement that relates to an asset?
Stationery?
No, depreciation.
Okay.
Is depreciation an expense?
Yes.
Is there cash flow associated with depreciation?
Yes.
No, you don't pay the vehicle for driving it.
Okay.
Okay, there's no cash flow. Right, think about it. Depreciation is something that you process in your books that is a expense, but does that represent a cash flow?
It does represent the cash flow.
It doesn't represent a cash flow. How is that cash flow? Did you pay anyone anything?
It's depreciating cash.
Pardon?
It's money that's being depreciated.
No, it's value that's being depreciated.
Okay.
Okay, there's no movement in cash. Remember, cash flow is just, did you receive cash or didn't you?
Okay.
If you received cash, it's an inflow. If you paid cash, it's an outflow. If it's none of that, you don't even look at it. You don't consider it.
Yeah.
Okay, so depreciation is never included in a cash flow because it's a non-cash item. So what must I do? If I've got it, then I need to take it out. Okay, so let me ask you this. Would depreciation have been taken into consideration when working out the profit before tax?
Yes.
Yes, it would have. So that means that depreciation would have been taken out, meaning I have to add it back. That's why you do adjustments to get all the non-cash items out, and then you'll have cash generated from operations. Right, then you have a few other line items like interest and tax and all of that, and then you have a final total which is cash flow from operating activities. Right, and that's what your indirect method looks like. See, this is what you need to study. Okay, if you're still not familiar with this, you need to go back to those previous videos that you've got, and you need to go through just the cash flow, okay, and just revise that. Right, you've got the notes, you've got the study guide, and you've got other past papers as well. You need to be comfortable with the format, okay, with the layout. If you don't know that the indirect method looks like this, okay, then there's no guidance in terms of helping you to build an answer, okay, because this is what you need to learn. Sorry. This is what we need to learn. Once we've got this, then all I need to do is look at the information in the question and do the calculations. Got that?
I've got that.
Okay, so that's where you start. Alright, cash flow from operating activities, that's the section that I need to build. Okay, for this particular question, 23 marks, it's probably around 25 minutes or so. Yeah, 28 minutes. Okay, so the following information pertains to multi-CC. We know it's a CC, so we know we're going to be dealing with members and things like that. Where do we start with the cash flow? It's always down here at the bottom, dish information. Because remember, it's easier to adjust for balances here, okay, at the top, if you know what the adjustments are at the bottom. Okay, and that's the best way of doing it. Start at the bottom and move your way up through the different line items. Okay, because all these line items you'll see either have a cash flow or don't have a cash flow. You won't know which have a cash flow or not. You'll have an idea. So for example, members' contribution. Okay, if I just look at this, did the members' contribution go up or down?
It went up.
It went up. So you would be expecting what? An inflow or outflow?
Inflow.
Yes, you'd be expecting an inflow because you can see that the members' contributions went up, meaning the business must have received more cash from the actual owner in the form of a member. Make sense?
It does.
Okay, so see, that's what you need to do. You need to think about, where will I find bank? Okay, that's what we said when we covered the theory. Bank is your big focus. I just need to know, is bank going to be part of this account? Yes or no? Can bank be part of the members' contribution? Yes. Where would you expect to see bank for members' contribution? On the debit or credit?
Debit.
No. Members' contribution is what type of account?
A liability.
No, members' contribution isn't an obligation. How is this an obligation?
No, members' contribution. It's an asset.
It's not an asset. There's no resource controlled here. If the member contributes something to the business, who's the member? The owner.
Yeah.
If the owner's contributing to the business, what is that?
It's income.
It's capital. Capital is money contributed by the owner to the business.
Yeah.
Okay, so capital would have a credit balance, right? So bank would be on this side because this account would go up, and then you would have a bank T account, and you would have members' contribution on that side, or total receipts on this side, debit, because bank is going up.
Yes.
Okay, so that's what you're doing. That's the theory behind it. Okay, that's what we covered a few weeks back. Okay, so bank is what you're trying to find. You're trying to get the inflow or the outflow. That's what you need to do.
Yeah.
Okay, that's just revision. Now let's look at the question. 3.1. No land and buildings were sold during the financial year. So if no land and buildings were sold, there's no inflow. Do you agree?
Yes.
Because if I sell land and buildings, then I'll get cash. Land and buildings were acquired to expand the operating capacity of the CC. So if I buy land and buildings, inflow or outflow?
Outflow.
Yes. No furniture and equipment was purchased during the year. It's business policy not to sell any furniture and equipment on credit. Okay, so you can see here that you didn't buy any furniture and equipment. Okay? And you didn't sell any furniture and equipment. Do you agree?
Yes, I do agree.
The only thing that happened here was buying land and buildings. So now we go to the question and we look for land and buildings. Where's our land and buildings? There's our land and buildings. Did it go up or down?
Went up.
Okay, so if it went up, what does that mean?
Inflow.
No, how can that be an inflow?
No, so it's bought. Obviously it was bought, so that's an outflow.
Exactly. Okay, if you're buying land and buildings, there's going to be an outflow of cash. Operating,
Yes.
financing, investing.
Financing.
No, land and buildings is an asset. Okay, let's revise the different sections.
Okay.
Okay, so operating is day-to-day running of the business. Okay, so if it's day-to-day, it's operating. Financing is the other section that you could have. Financing is looking at debt or equity.
Yeah.
Okay, so loans or shares or capital or members' contribution or anything along those lines. That's financing. Then you've got investing. What is that covering? Assets.
Loan.
Long-term assets. Capacity. Okay, you invest. You buy assets. You grow your assets.
Yeah.
Okay, so that's what you need to remember. That's how we covered the theory. Okay, keep it simple. You remember sections. Debt and equity in that section, assets in that section, day-to-day in that section. That's it. Okay, so now if I go back to this, land and buildings, what is it? Operating, financing, investing.
Investing.
Investing. Do I need it for this question?
No.
No, not for this question, because I'm only looking at operating. Okay, the question also said that no furniture and equipment were purchased during the year. It is business policy not to sell any furniture and equipment on credit. So if you don't sell furniture and equipment on credit, how else can you sell furniture and equipment?
Cash.
Exactly. Is that an inflow or outflow?
Inflow.
Exactly. Okay, so now where are you going to find bank then? Which account's going to give you bank? If you know you've sold furniture and equipment. Because have a look. Did furniture equipment go up or down?
Up. Down. Down.
Okay, it went down. So is that an inflow or outflow?
Upflow.
It's an inflow because you get money when you sell assets.
Okay, yes.
Okay, so operating, financing, or investing?
It's operating.
No, it isn't.
But it isn't selling
furniture and equipment, long-term assets, same as land and buildings, right?
Yeah.
Okay, so bank would have appeared here, but it wouldn't have been applicable for this question because both of those are for investing.
Okay.
Okay, so if I was asked to do investing, I would draw up the T accounts and I would solve for bank.
Okay.
Okay, but I don't need that for this question. But I'm just covering everything, so I'm just revising as I go as well. Obviously, in the exam, you'd be focusing only on this.
On operating, yeah.
Operating, exactly. Okay, don't waste your time on long-term assets because you don't need them. It's not operating, it's investing. Okay,
Yeah.
let's carry on. So this point is, thank you for telling me that, but I know that's for investing. I don't need to do that for this question. Because if you did, then they would have made this question longer. This question would have been maybe 35 minutes or 40 minutes, and then they would have given you 35 marks if they also wanted you to do the investing and financing sections.
Yeah.
Okay, so you need to be very specific. That's why you need to know your theory and you need to think about the different sections. And do I need this or don't I? That's the big key.
Yeah.
Okay, let's go back. Let's look at the next point. Listed investments. Okay, so here's shares. 3,520 ordinary shares in I Limited. Acquired on that date at a fair value of that amount. None of the shares were sold during the financial year under review. Do I need this?
No.
I don't. Okay, why? Is this operating, financing, or investing?
It's investing.
Correct. It's an investment. So if you're buying shares, you've invested. It's a long-term asset. Okay.
Yeah.
Do I need this? No. Same reason as before. It's an investment, investing activities.
Yeah.
Okay, so again, don't need that because that's investing.
Yes.
Do I need 3.3?
A profit distribution of 48,000 was allocated and paid to members during the financial year. Yes.
Of course I do. Operating, financing, or investing?
Operating.
Good. Okay, profit is a payout of day-to-day income and expenses, right?
Yes.
Okay, so they even told you how much they paid out. What did they say? 48,000. That's nice and simple. All you're going to do is you're going to go to your cash generated for operations. Okay, that's the subtotal. After the subtotal, you're going to write down outflow from distribution to members.
Yeah.
They gave it to you in the question. You don't have to calculate anything because it's given. Okay, if it's given, it's given. 48,000 was allocated and even paid. See, there's the word paid. Paid means outflow.
Yeah.
Right, so you definitely paid 48,000 minus 48,000. Red, bad, in brackets. 3.4, do I need this?
Yes.
Members' contribution received in cash. We spoke about this earlier.
Members' contribution were received in cash. No, you don't need it.
Why not?
Because it's members' contribution.
And what is members' contribution? Capital.
Yes.
Where does capital go? Operating, finance, or investing?
Investing.
Financing, because this is equity. Capital
Oh, it's money, yeah.
is part of owner's equity. Equity is disclosed in the financing section of a cash flow.
Yeah.
Okay, so I don't need 3.4 either. It's not applicable to an operating activities cash flow. Right, 3.5. Do I need 3.5?
Interest on the long-term loan borrowing was paid in cash. No, because it's long-term borrowing. That
okay,
is.
Be careful. You're right about the long-term borrowing. So, yes, long-term borrowing is financing. I agree with that. But this isn't about the long-term borrowing. This is about the interest on the long-term borrowing.
Yeah.
So, is interest operating, financing, or investing?
Operating.
Yes. Interest is day to day. Interest is calculated on those loans day to day. Interest must be part of operating activities. Right, so 3.5 you do need, and it's interest. Okay, so now I've covered all the additional information. So now it's easier when I go back to the question, because now I can go down line by line, and I can just identify things easily because I know if it's non-cash or not. Okay, let's deal with the interest first. There's the interest. Okay, what did they say? They said it was paid in cash. Do you agree?
Yes.
Okay, so if I'm looking at the extract of the statement of financial, statement of profit and loss, and then if I look at the statement of financial position, okay, is there anything in the financial position that relates to the interest?
Hello. Hello? Yes? Yes, I'm in my lecture, Dad.
Is there any interest here in the statement of financial position?
No.
Okay, there's nothing here, right? Members' contribution, retained earnings. Do I see accrued interest or anything like that here?
No.
No, I don't. So what does that mean? Does that mean the interest has been paid?
Yes.
Yes. Okay, because there's no accrual. If there's an accrual, I need to provide for it. There's no accrual. That means the interest that's an expense is the interest that I paid. Does it make sense?
Yes.
Okay. Notice also, though, that you had profit for the year. Okay, so I need to put the interest in, but remember, profit for the year isn't something that I need to record. What do I record in the cash flow? Indirect. Profit before tax.
Yes.
So now, how do I get profit before tax from profit for the year?
Profit before tax.
I need to add back the tax, right?
Yes, you do.
Okay, so it's profit for the year, 113264. Add back the tax gives me the profit before tax, not so?
Yes.
Okay, so there's the first bit. Okay, so now I can tick this, or I can even cross it out. I've done it. Cross it out, I've done it. Interest on long-term loan. Would the interest on long-term loan have been part of the profit before tax figure? Yes, it would have.
Yes, yes.
Okay, so you have to subtract, not subtract, add it back, because you would have subtracted it, so you need to add back the interest.
Yeah.
Okay, and then you show it as an outflow. Okay, because you can't show it twice. You can't show it up here and then also show it down there.
Yeah.
Okay, so now I've done that. I can cross that off. Alright, so now we've looked at all the dish information. We've looked at 3.5 now. Now we can go and we can go line by line by line by line all the way till the bottom. Okay, so let's start with the first one. Members' contribution. Do I need it?
No.
Correct. Why? It's which section?
It's an asset.
No.
So it's financing.
Correct. It is financing because it's capital. Good. Retained earnings. Do I need?
Yes.
Yes. Why?
Because isn't that what the members are allowed to receive?
Correct. And there could be bank there as well. Okay, good. Okay, so this is the first working that we're going to have to draw up. Tier accounts. Lots and lots and lots of tier accounts. That's the approach when dealing with the cash flow. Okay, why? I don't have to study all the different rules for all the different scenarios. As long as I know my debits and credits, I can draw up these tier accounts and I can get the right amounts. Okay, so retained earnings. See, this would have been part of my workings, part of my solution. Okay, show all your workings. It's important. They could carry part marks. Okay, so retained earnings. What is the balance at the end of the year? End of the year? 116.
Yeah.
Beginning of the year? 51. Debit or credit side? Credit side. It's equity.
Yeah.
Okay, so balance brought down, balance carried down. Balance carried down 116564. Opening balance 51,300.
Yeah.
That's what you've got. Okay, you know there's a profit for the year. We saw profit for the year, it was 113,264. So we can put that in. That would have come from profit and loss. Okay, straight from the question. Profit for the year was 113,264.
Yeah.
Okay, then they also told you there was an outflow from a distribution to members of 48. Okay, so 48 is a distribution. There would have been a distribution to members of 48,000. Okay, now all I need to do is just check what's left here. Okay, what's the balancing figure? So let's balance both sides off. Which side looks bigger? Let's add that. That's 164. Add that. That's 164. Brilliant. They both add up.
Yeah.
Sum up that side. Sum up this side. Okay, adds up perfectly. So now you know there aren't any other cash items in retained earnings. So now we can move on. Okay, so I don't need retained earnings. Long-term borrowings do I need?
No.
Which section?
It's investing.
No.
Financing.
Yes. Financing because it's debt. Long-term borrowing is debt. You finance assets through debt or equity.
Yeah.
Trade and other payables, do I need it?
Yes.
Yes, I do, because this is part of the specific disclosure relating to this, the indirect method. Okay, with the indirect method, you have to provide for changes in in current assets and liabilities. So this goes under your adjustments. Did your trade and other payables increase or decrease?
Increased.
Correct. So what does that lead to? An inflow and outflow?
Outflow.
Pardon?
An outflow.
An outflow? No.
No, but
when do you pay your receivables? Your payables? You pay when they go down, right?
Yeah.
So if I decrease my trade payables, that means I've paid.
Yes.
So if I increase, that means I received. It's the opposite. It's an inflow.
Okay.
Okay, so 28800 minus 26340 gives you an increase. That's an outflow. Sorry, not outflow, inflow. Inflow from increase in trade payables. Okay, current portion of long-term borrowing. Do I need that?
No.
No. Again, it's long-term borrowing, financing. SARS income tax. Do I need it?
No.
Yes. Don't you pay SARS?
Oh, yes, you do.
Yes,
it's
you
operating.
do. Okay, it is operating. Tax paid. Okay, so tax paid will go here. Okay, we just need to know what the tax paid is. So what do? Draw up a T account. Where am I going to find bank? I'm going to find bank in the SARS income tax account. Okay, SARS income tax, we've got a credit here. So it started with 1,000.
Yeah.
What did it end with? We need to check. Okay, so I've looked at all of these. I'm looking at SARS now. Do I see SARS anywhere else? No, I don't, but I've got income tax. There's it. Okay, so the balance here was 0 then. There's no SARS asset, it's just SARS expense. Do you see that?
Yeah.
Okay, so the balance is actually 0 here. 0 at the end, 0 at the end. Okay, what is the tax? There's the income tax, 41,136. That would have been on this side, 41,136, because you would have debited the expense and you would have credited the liability. Okay, expenses go up on the debit. Right, so which side's bigger? Obviously the credit side. Right, so how much tax did you pay? Bank. Okay, what happens to bank when you pay?
Decreases.
Correct. Okay, so there's your missing figure. You're decreasing the bank, meaning you're debiting the SARS income tax and you're crediting the bank. Okay, there's your debit SARS income tax. Why? Because you credited the bank. Payment or receipt? Payment. Outflow from tax paid minus that figure over there. Okay, that came from our working.
Yeah.
See that?
Yes.
Okay, good. Next. Go back. Bank. Do I need it? No, because I'm looking at a cash flow. Bank is the cash flow. This you would have done if they asked for the entire cash flow. Land and buildings, we spoke about it. Do we need it?
No.
Which section?
It's an asset.
Good. Investing.
Yeah.
Furniture, equipment, investing. Listed investments, investing. Bank, debit. Okay, again, those two go together if you asked to draw up the whole cash flow. Okay, we had nice examples in your study guide where we looked at those. Okay, where you saw it balanced. Okay, obviously in the exam you'll never be given a complete cash flow because there's just too much marks that would be awarded for it, and there are other sections that they need to test as well. Okay, so they'll always ask for sections. A section, either investments or financing or operating. Okay, trade and other receivables. Do I need it?
Yes.
Correct. Okay, what happened to it? Did it go up or down?
It went up.
Inflow, outflow?
Inflow.
No, outflow. Okay, when do you receive money from your receivables?
Oh, sold. So
when,
it's
when
yes,
they
it's
pay you, right? When they decrease.
yes.
Okay, so an increase in trade receivables, okay, is an inflow outflow. Outflow. Okay, if it decreases, that means they're paying you. Okay, so that would be an outflow. So an outflow would be minus 35520 plus 27360. Difference is 8,160. Okay, accrued income. Do I need it?
No.
Yes, it's a current asset. Adjustments need to be provided for current assets and liabilities. Okay, so what happened to the current asset here? Did it go up or down?
It went down.
Okay, inflow, outflow.
Inflow.
Correct. Okay, so inflow from a decrease in accrued income. Okay, inflow from a decrease in accrued income, that is 1440. Right, inventory, do I need it?
Yeah.
Yes, did it go up or down?
It went. There's nothing. It went down.
It went down. So inflow, outflow.
Outflow.
Outflow, no, inflow. If you sell stock, it's going out. So
but
inflow from a decrease in inventory.
But it's rent.
No, inventory.
Oh, sorry, I was looking at the wrong one.
Yeah, we looked at the accrued income. Accrued income is the accrued rent income.
Okay.
Okay, so if you decrease inventory, that means you're selling it. If you're buying inventory, that means you're buying it.
Yes.
Okay, so it's an outflow, inflow. This is an inflow. Okay, so inflow, 96,000 minus 90240 gives you that as an inflow. Okay, so I need the distribution to members payable.
No.
Yes, you should draw one up just to check. Okay, there shouldn't be anything in there, but I just want to show you it. Distribution to members was 48. Okay, so you'd have 48 here, and that would have come from the retained earnings. Okay, then you had a balance on the distribution to members payable. Okay, you started with how much? 20,660. Okay, and you ended with 6880. 6880. Actually, there might be an additional amount here. Okay, they did say that you paid 48, right? Okay, so bank, they said was paid, asterisk, additional info. They told you that you paid 48,000, so that would have come out. Am I still left with something? Yeah, I am. Okay, so this side is bigger, so there would be another bank amount. Okay, so that side's bigger than that side. Balancing figure is going to be for bank. And it's going to be this minus that gives you an extra amount. Okay, this is an extra distribution. Okay, so here we had outflow from distribution to members. We need to change this. It's going to be brackets 48,000 plus 13,780 close brackets.
Yeah.
Got that?
Yes, got that.
Okay, last bit, the profit and loss. Okay, revenue, income or expense. Do I need it?
Yes.
Ooh, where's my answer sheet now? There's it. Okay. Revenue I don't need because this is not direct.
Okay.
Okay, if it was direct, then I would use revenue. Okay, this is indirect, so I don't need revenue. Do I need cost of sales? Only if it's direct.
Yeah.
Profit and sale of non-current assets. Is that a non-cash item?
What?
Profit on sale of a non-current asset.
Yes.
Yes. Okay. So see, things like this you need to remember. adjustments, you adjust for non-cash items and changes in current assets and liabilities. Profit on sale is a non-cash item. It'll always go here. If you see it, you put it in. Got that?
Yes.
I'm just going to write down furniture and equipment, F&E. Okay, furniture and equipment, 800. Dividend income. Do you agree? That's a receipt, right?
Yes, it is.
Okay, so dividend income, you have to take it out of the profit before tax, so minus the dividend income. How much was it? 17,280 asterisk div income. Okay, and then you have to show it separately here, dividends received. Okay, so you take it out and you show it. It needs to be shown as a separate disclosure line item. Okay, fair value adjustment. Is that cash flow?
No.
No, it isn't. So non-cash flow items get taken out. See, that's another thing you can remember. If you see fair value adjustment and it's an indirect question, get rid of it. Take it out. Fair value adjustment. If I'm taking it out, oh, profit on sale. If I take out the profit on sale, I need to minus it, not plus it. Okay, because you're taking it out, because you would have added it. Do you agree?
Yes.
Okay, just be careful with that. You need to think about cash flow. Okay, fair value adjustment. This went up or down? This went up, looks like it. Fair value adjustment looks positive. It's not a negative. Okay, so if it went up, it'll come out. It'll be minus then. Negative. Well, how much was it? 21,120. Got that?
Yes, got that.
Okay, remuneration. Inflow, outflow.
Inflow.
Outflow. You'll keep it in. It'll be part of the profit before tax, so you don't actually do anything with it.
Okay.
Salaries to members would also be part of profit before tax. You would leave it. Depreciation furniture equipment. We spoke about this. Non-cash items must be taken out, right?
Yeah.
Depreciation, you would have subtracted it, so you have to add it back. So 4,800 must be added back.
Yeah.
Water and electricity would have been part of profit before tax, so you would leave it. Credit losses, is that cash flow?
No.
No. Again, non-cash items, take it out. Anything that's a non-cash item, you take it out. So you would have subtracted, you add it back. So 3,000. Okay. General expenses would be an expense which you would have paid. You would have shown that separately as is. Alright, and that's it. Now we just need to total up. Okay, so my profit before tax line item, I need to work out a total here. Okay, get rid of that there and then just work it out. There's my answer. There's my profit before tax. Okay, then I take this figure and I add and subtract all these amounts, and then I get the cash generated from operations. Alright, so this figure plus and minus all those changes gives me that answer there. Okay, and then I add and subtract all of these figures and I get the final answer.
Yeah.
Okay, so cash flow from operating activities comes out to 37,864. Right, and that was the indirect method question. Indirect is always like that. You need to look at this. Changes in current assets and liabilities. And you get rid of non-cash items. Nice question here because they gave you lots of non-cash items.
Yeah.
Okay. Happy?
I'm happy.
Great. And that covers that particular past paper.
Perfect.